Hi there everyone, good evening and welcome to this edition of Startup Central. I'm Avanne Dubash. This is the show dedicated to entrepreneurship, new age tech and all things to do with the startup ecosystem. We'd love to stay connected with you, so do reach out on suc@etnow.tv or on my Twitter handle. Lots lined up on the show today. Let's kickstart the show with the top stories in the startup universe. All right, let's kickstart the show then and connect with Nishant Sharma. He's the founder and managing partner at Kedaara Capital. Nishant, good to have you on board. Now, given the fact that, Kedaara was focused on homegrown private equity fund, give us a sense as to what the total AUM is that is managed by the fund and what the investment team is like.
Sure, Avanne. Thanks, first of all, for having me on ET Now. I think when we started, private equity as an industry in India was still relatively nascent, almost a cottage industry. And there weren't a lot of folks who had seen cycles across India. Our intent was to, build a firm which was combining financial acumen with operating expertise. And that's what we were solving for. We were also solving for, actively looking for exits in a disciplined way, right? Otherwise, there was a lot of money which was getting invested, but not a whole lot of exits which were coming out, which is obviously an important part of the life cycle of the private equity industry. And we were also trying to, build a firm in some ways which had the best of the local model, which is decision-making on the ground in India, very agile, having full context, but also having access to global best practices, which we did eventually through our partnership with a global firm called Clayton Dubilier and Rice, while retaining our independence and autonomy as Kedaara. Right? So those were sort of the three design principles in some ways when we set up Kedaara. And obviously we've come a long way now from the first fund, which is about just under 600 million in AUM. We're today managing a little over 4 billion in AUM. Our last fund was about 1.1 billion. Which was in 2021, and we've invested in about 6 different companies across these last 11 years since we started investing.
So you're following an operationally oriented strategy. Throw more light on it, what exactly that entails.
Sure. So I think our approach, Avanne, is to take good businesses and help them move a few orbits and hopefully build them into great lasting businesses. In essence, we're really playing the good to great story, either backing existing founders and entrepreneurs in their journey, or in many cases, actually acquiring a company 100%, or in partnership with someone else, and then going through the same journey. So that obviously requires very deep understanding of the themes that you're working on, whether it's around consumer and retail, which is one of our core sectors, financial services, which is the second area, pharma and healthcare, which is the third area, and tech services is the fourth area. So we really spend a lot of our time specifically in these areas, to make sure we have complete knowledge. We have operating partners who've been CEOs of businesses in each of these sectors, so they really understand the operating nuances of each of these industries. And when we invest behind a business, we have a very clear value creation plan to drive, growth and build it into a lasting business, beyond just our investment horizon. Right? That's always the intent. So That includes obviously enhancing many times management team and their bandwidth. It includes enhancing systems and processes, helping them with organic growth and refining, the models that they've built over time, and also selectively looking at M&A. And all that is obviously done with the entire team that works on, these investments throughout the course, of the investment.
So what's going to be the big sector bet then, Nishant, for the year ahead?
Look, India is very well poised. When you look at the globe, obviously there are always talks of recession and relatively benign sort of, environment in general. But India, in some ways, is a bit of a bright spark. And when we look at the consumption in India more broadly, domestic consumption, ultimately that manifests itself in themes in consumer and retail, themes in healthcare, themes in financial services. So we feel excited about each of these three areas because underlying consumption in India remains strong. There's obviously, because there's been a K-shaped recovery, the middle income and the upper middle income households have obviously had a faster recovery relative to the lower income households, but the recovery is happening. And then relative to the rest of the world, I think that, as an economy, we are growing much faster. And there is, significant underpenetration across various categories. You have to combine this macro with the micro. You have to look at obviously specific categories. But I think at a broad level, that's what we're excited about. In addition to that, we're also quite excited about the tech services space, where we obviously have a vast, talent pool in India of engineers, and folks who can help as we move forward in the Gen AI era, in the tech era, where we can continue to sort of build interesting tech services businesses which are supporting, front-end customers in other markets, including US, Europe, etc. So that's sort of the export piece, which we continue to be quite excited about.
So there has been a focus as well, Nishant, on the entire financial space with the investments made in the likes of Veritas Finance or Spandana Spurti. How have those panned out for you?
I'll talk about the themes in particular. Like I said, given we specifically ourselves don't look at listed opportunities, some of our businesses obviously through the course of their evolution gone, to become listed companies. But in general, what we like, as an institution are monoline retail businesses. So for instance, if you look at our journey, we've invested in AU to begin with, which was an NBFC, and it became a small finance bank. And it's really become one of the prominent small finance banks in terms of really scaling its balance sheet, with quality and, in a very calibrated risk way. Then we invested in Aavas, which was actually, a business which was a subsidiary of AU. We bought that with Partners Group and, built an affordable housing finance business, which clearly was one of the first movers and has truly, created that category in the industry. We invested in Spandana, which at that point in time when we invested was obviously coming out of, the MFI crisis back in, many years ago. But we capitalized the business and then took it. But it was again a pure microfinance business, just like Aavas was a pure housing finance business. Then we invested in Veritas Finance, which is again a focused micro, small, and medium enterprise lender. So it focuses entirely on small sort of shop owners who have small businesses and have, obviously needs for which they take secured loans. And also invested in a pure play health insurance business called Care Health Insurance, which was used to be called Religare Health Insurance earlier, but now it's called Care Health Insurance. So one of the things that you'll see is we like focus, in general, a more diversified sort of approach for us. We feel having, specialists who know exactly sourcing, underwriting, risk management, portfolio management are better equipped to deliver superior sort of, ROAs and ROE compared to more diversified businesses. And, if I just extrapolate that, because many of our businesses are listed, I think clearly relative to many of the other sectors, given the growth profile, given the relative underpenetration of credit and how underserved some of these segments are, at least relative to the broader market, perhaps there is more value in some of these.
And what about the blockbuster one, and that would be on Lenscart? Give us a sense as to what was the investment rationale for that, and how did you guys zero in on the company?
Yeah, no, absolutely. So I think Lenscart is very much an investment. It's a business that we've tracked for a long time. Well before we invested. The investment was obviously in 2019, but we had tracked the business for a long time. Piyush, who's the founder of the business, obviously saw that category as an opportunity to truly build, an organized player of scale, because it was before Lenscart, really came into the category. It was very fragmented. It continues to be very fragmented. Lenscart's probably the only sort of organized player of scale, which has continued to grow disproportionately and then consolidated, including its recent acquisition of Owndays, which is Pan-Asian eyewear chain as well, which gives Lenscart sort of very strong position all over Asia, including India and Asia, Thailand, and so on, in Japan. I think what was appealing in Lenscart's case was the fact that they had a strong market position. They had strong unit economics. They had strong management team, which was running the business, and they had a very strong customer angle, where they had essentially built a footprint, a box model which was replicable across different classes of towns, different geographies, with very consistent outcomes, right? Both in terms of customer delight as well as financial metrics. And that's something which, obviously a lot of the credit goes to Piyush and the team who've driven this business in such a consistent manner. But even since we've invested, which has been 4 years, the business has continued to grow very, very well, both organically and inorganically, and continues to sort of scale. The idea has always been, how do you really, deliver customer delight in a category where typically you're used to sort of going to your optician and waiting for, a few days before you get it back. Today, I mean, many times it ships to, in Bombay and Delhi on the same day or the next day, right? That's sort of the work that the team has done in order to really build a lot of focus on customer expectations.
And if I were to ask you to pick out what the outlook is when it comes to chemicals or tech, do you think that one is going to be at the forefront?
Yeah, I think, look, we've spent time in chemicals. We feel that it's obviously a space in terms of underlying capability. India has always been strong in pharmaceuticals and chemicals. But, sometimes the challenge becomes when valuations run ahead of sort of, fundamentals. Then obviously, despite the underlying strengths, it can be a challenging sort of investment, right? So for us, we feel chemicals has sort of gone through that phase where some of the chemical businesses, are perhaps expensive, even though fundamentally they're very strong businesses. So therefore, I think we're spending, time on businesses like, for instance, single specialty healthcare services, where we feel there is plenty of opportunity, because, multi-specialty hospitals obviously solve for more complex, oncology, cardiac, neuro cases. But there are out of hospital, categories like skin and hair, fertility, eye, which, don't need sort of a multi-specialty setting to be addressed. So we are focused on those models, which are more scalable boxes in our view. And there is massive unmet need in those, like the investments in ASG, the investments in ASG Eye Care, in OSS Fertility, Oliva, are all a reflection of that in many ways. And we feel that that's, a trend which is played out really well in more developed markets like in North America and Europe, and that's something which over the years will also play out in the Indian market. So we've sort of impact that trend in many ways in healthcare services, an example. On technology, I think technology will have a pervasive impact across all sectors. So it's more like a horizontal which cuts all sectors, and some sectors probably are adopting it faster, like retail, and consumer in particular, because it really helps improve customer experience, helps drive productivity. But that's something which will be relevant across the four sectors that I spoke of earlier. And one of the investments we made recently, which was in a financial services SaaS business called Perfios, is a reflection of that. That's a business which serves a lot of banks and BFCs, insurance companies, and really helps them make better, faster underwriting decisions, and allows them to process sort of loans at a much faster pace. So the reliability and the availability is quite superb. So that's one of the themes that we're exploring. I mean, beyond financial services SaaS, are there other SaaS opportunities that could be interesting as we move forward?
And how does India stand, according to you, Nishant, as an investment opportunity?
I think we are very bullish in India as an institution, as a group. I think we've always, been very sort of all in when it comes to India. Like I was mentioning earlier, I think globally, obviously, there are concerns given continued sort of interest rate hikes and just the general demand environment being less exciting. But in India, on the other hand, the demand environment is definitely better, especially in certain categories when we look at our own portfolio as well. So we feel actually quite high conviction, blessed in many ways, to be looking at various opportunities in India. Obviously, it requires, there's always a certain level of calibrated optimism or cautious optimism, that say, which is needed when you're an investor, because you need to look at the risk reward at all times, in any given opportunity, and that's something which we do for a living. So we feel the next 10 years really belong to India even from a global stage standpoint. A lot of things have fallen into place for us as a country, both from a availability of capital standpoint, and many other regulatory sort of standpoint, reform standpoints. All of those things will help us propel the country forward, and obviously by virtue of that, private equity as an industry and the beneficiaries of capital. In some ways, one of the things which has changed for private equity industry in the last 10 years is no longer seen as just a pure capital provider. It's really seen as a solution oriented partner, right, which helps companies truly scale up and realize their vision and build them into great businesses, which I think is maturity that's happened in other markets, and that augurs well for India as well.
Before I let you go, Nishant, there's a rapid fire, or a startup quick fire as we like to call it. So we want to understand a little bit more about future trends ahead. So one quick word that comes to mind, okay? Let's begin with 3 things that you look for before investing in a company.
Management team, in particular CEO, business model, and market opportunity.
Okay, and what's the one major no-no when it comes to investing in a company? The one thing that completely puts you guys off?
I think major no-no in some ways is sort of, corporate governance and, having someone who's sort of not focused on the right value system. That's in our mind the most important thing that we try and look for in any company. It's a binary decision for us. If it doesn't meet our bar, then we walk away.
Any missed opportunities that you go, damn, I wish I'd put my money there?
Lots of them. I think, our business is such that it's a funnel, right? So you end up obviously, missing quite a few.
Yeah, I'm sure there are lots of them. But would you like to share the name of one, maybe?
When we share one that comes to mind, we missed KPIT at one point. It was an engineering design business which we looked at, but we missed that. So yeah, that's one name that comes to mind.
Okay, that's interesting. KPIT Tech, especially in light of Tata Tech's mega IPO. And what's the next breakthrough according to you in technology?
I think Gen AI seems to be the next big breakthrough at this point. It does seem to have a lot of promise, but as we've seen in the recent few days, it also has some really sort of challenges that as a society and as a group we need to really tackle. Definitely that seems to be the next frontier for tech and improvement in productivity going forward.
And what's the next big sector bet?
I think SaaS in India, there's sort of, it's something which is an opportunity. I feel in the next 10 years, there will be a lot of very interesting SaaS players that I think would come out. And if I can take the liberty of adding one more, I also feel that single specialty healthcare will also see a lot more scaled players emerge in the next 5 to 10 years.
All right, good to have you on board, Nishant. Pleasure interacting with you. Well, let's shift gears.